Hi guys, please let me know if you could see my screen. Thank you. Welcome to the Wyckoff Trading course part 2. Majority of you have been already the students of Wyckoff Trading course part 1, so you know how it goes. This is definitely more relaxed, and more relaxed in which way? In that you know what's going to happen. But it's definitely gonna pick up intensity in terms of like what we're gonna do, how much we're gonna do it, the quality of it, and so on and so forth. I've been encouraging alumni to sign up again for multiple semesters, and the reason is going to become very evident, in our second part of the class, where we will be doing a lot of bias games. And this is going to be the work for this semester. So for those of you who are alumni, whether you are WTC1 or WTC2, it doesn't really matter. We're going to be studying what we call the sequential bias analysis, which will help us to identify the bias within the trading range. And sometimes we will be successful, sometimes we will not be successful. I'll talk about the validation of the bias, of the sequential bias analysis, throughout this whole class. And we've conducted the experiment. For those of you who've been in the previous semester, you're well aware of this. We just basically took all of the trading ranges that we don't know the bias, and we went through, how many did we go through? I think like around 40. Yeah, so we ended up, I think around, no, actually even more. I gotta double check on that. I think it was like 28 to 15 or 17, something like that type of score. So we were around 63, 65% correct in our bias games. That's a considerable edge. Like I would consider anything above, 60% being really good. So we're right at that threshold. And then obviously you can make money even with, being right lower than 50%. You just need to understand the dynamics of the risk and reward. Again, something that we'll definitely talk about throughout the whole semester. As usual, everything that we present here is for educational purposes only. Please stop the recording and read the disclaimer in full. Okay, so here are the class details for those of you who would be attending this class for the first time. Your cost is $998. You could do the recurring payments interest-free, so I usually would suggest that if this is something that you're looking for. If you're already an alumni of this course, WTC2, then your rate is $700. And by the way, we have the new pricing because a lot of people take this class multiple times. So what we've established is that cycle number 2 to 5, this is the 700 for alumni rate. And then once you go further, because we have already, at least 3 people who attended more than 5 times that I know of, right? So here we're gonna say from 6 to 10, that's gonna be 500. And then anything above 10, just gonna be a 300 until the class exists. So you could keep having this come 15 sessions, 12 sessions per semester, and you could keep going basically and practicing each week. And that's my kind of suggestion to you. We are trying to lower the price to you guys and for you so that you would feel more comfortable just going and just practicing. As I state many times, not only deliberate practice, not only number of the repetition that we need, but we need to be in the habituation for some time. And I'm seeing how like 2-3 semesters, and then people are feeling way more comfortable with the sequential bias analysis and everything else. Okay, and this is an example of this. Obviously, Franz is an outlier. He has taken it not 13 times. Now it's going to be, I think, 15 times or 16 times. I don't even know how many times he's done this. And that's why I have his testimonial here. What are we going to study? We're going to study significant bar analysis. So this is our way of looking at the construction of this swing. Then swing analysis itself, which is the construction of the price structure. I mentioned sequential bias analysis. So this is determination of the bias in the trading range. We're going to do also a lot of, I'm thinking about the sequential bias analysis as a continuation of the bias beyond the trading range. So we'll do a lot of those. We most likely not going to do anatomy of the trade. For this semester, I'm going to exclude this, but we're going to do lots and lots and lots of bias games. And for those of you who are already students in this class, for those of you who are planning to sign up today, for this class, the home assignment is going to be obviously the current bias games that we have. I believe 224, which we published yesterday. Actually, did we do that? Yeah, I think it's still in the edits, so it's going to be published tomorrow. But 224, that's the bias game that we need. So we'll go through that, but then I'm going to ask all of you to send me as many charts as possible of the trading ranges, and up to a certain point, we will discuss up to which point in phase D you need to send that particular chart, and then send it to me without the answers. I don't want to know. And then during the class, we're going to have multiple ways of how we go through the SBA, the sequential bias analysis, right? So I'm going to do it by myself. I'm going to do it with the student, and then the students are going to end up doing it by themselves. So that's going to be the sequence, how we're going to do this. So as you could see, we've done this before. We've done this many times, and that's the most effective way, to study for us. WTC1, for those of you who would like to take this class, but at the same time, you guys don't have the prerequisite. The prerequisite for WTC2 is obviously WTC1, and this is where we go through the analysis. There are a lot of people that come to me and say like, well, I've studied here, I studied with this person, I've read this book, I know about Wyckoff this much. Unfortunately, it doesn't work this way. I've kind of was burned many times before I stopped doing this practice. Even if you're familiar with Wyckoff methodology, it means nothing in terms of what you know of our material. And therefore, when you come to WTC2 class, and if you don't know the semantics of the base or the basics, and then how to analyze correctly, or you know how to analyze, but you do it in a different way than us, that's going to create a lot of questioning, unnecessary questioning from you, and that's going to distract the whole class, which I cannot afford as a teacher. So with that, please bear this in mind, that it's a necessary thing for us to have the prerequisite. And if you have not attended part 1, I would highly recommend it. And we are starting next week, January 8th, the same price, $9.98, or you could do the recurring 3 payments. What do we study there? Structural analysis, supply and demand, relative and comparative analysis, and trade management. Okay, great. Okay, Neil is saying, okay, I have 15 to 20 ready to send, just need to get numbering done for the trading ranges. Perfect, Neil, right? And we'll talk about, the ending of the chart where I want it. So I want it to be 1 bar before the know-it-all bar, right? So there are 4 know-it-all bars that we know of. And again, I'm gonna show you those probably in the next class or so. And then you just create the charts up to that point, send it to me, and then come to the live session as we go through your chart, through your trading range, and we are trying to decipher the bias. Be ready to tell us what the bias is. Be ready to tell us what the symbol is of the stock or the asset. Be ready to tell us the time frame and the period. And then we could go there and we kind of like could look how the trend has unfolded from that place, right? Because the whole purpose for us to decipher the bias of the trading range is obviously to trade the trend that comes out of that. Okay, a question: why should I enroll in WTC2? Well, I mean, you guys know, for those of you who are in our ecosystem, I don't have to repeat this, so I'm probably just gonna talk WTC1 alumni and also someone who's completely new to our ecosystem. As an alumni, you continue your education and training in Wyckoff methodology. You're not done. you know now a lot of concept from the methodology. You have some limited visual recognition skills. You have even more limited execution skills. So you need to go to the next step where you will develop that recognition of Wyckoff concepts on the chart. In other words, become a better chart reader. And one statement that is so true that I keep repeating to everyone who comes to our community: we do not guarantee that after taking just, let's say, WTC1 class, you're going to make money. We do not guarantee that even if you take all of our courses. You have to do it in a very specific way. You can't just watch the recordings. You have to do the homeworks. You have to receive some feedback on your homeworks. You have to adjust your analysis reflective of those changes that I'm going to ask you to do. You have to go to WTC2 for the skill development to see those patterns, because knowledge is not the skill. It's such a misconception by people that if they attend the class, that's it. They should be able to know how to make money and also to be able to do it. And I agree with the first part. We do tell you, we do show you, this is how you recognize this on the chart. This is the concept. But if you have not practiced that, you can't in the moment to recognize it correctly. It just, our brains are not created this way. You have to repeat certain things over and over in order for you to see it for what it is and not for what you wanted to see it. So, and it's kind of like a huge discussion with students just to get them on that level of understanding, on that level of consciousness where, like, you got to work on this stuff. If you don't, then don't come to me and say like, oh, I watched your class and then it's not working, because that's not how it works. You have to put in hours into the skill development. And in WTC2, definitely we have that. It's a weekly systematic deliberate practice through the homework and in-class feedback. So at least for one semester, at least once a week, you're going to sit down, you're going to go through the bias games, and then you're going to come to the class, you're going to receive you're going to receive the feedback on your homework. You're going to receive an opportunity to actually participate in the in-class discussion of the trading ranges that we're going to look at, and then adjust. And definitely, this is the promise that I give you for sure. There is only one really true promise that I give as, as kind of like the principal and the teacher at Wyckoff Analytics. You will become a better chart reader. You will see all of those concepts. You will be able to read the price structure. You will be able to read the character. You will be able to time your trades better. You will be able to execute them better. And you will be able to control your mental state better if you decide to go into training specifically. But if you're taking WTC2, visual recognition is going to be extremely important. Again, anatomy of the trade, we're going to exclude this semester. After WTC2, the next step is going to be the process. Extremely important step right here. Also, not recognizable by a lot of people. But then I kind of see that we've built this staircase for you, so that you would gradually get to the higher level of not just, understanding, awareness, execution skills. And we kind of see it like this: WTC1, knowledge; WTC2, start to build your skills. Then go to the process, go to something specific to your time frame, like for instance, intraday or swing specials. And then after that, training modules. That's the path right now. Knowledge, skill building, process building, specific very specialized knowledge, skill, execution. And then when you go into training, you basically go into an extremely intense environment where literally each day, it could be even several times a day, if this is the intraday training module, where your behaviors are being adjusted. And with those adjustments, you obviously learn much faster. You recognize things on the chart much faster. You execute much better. And some of the things that we look at in the training modules are extremely quantifiable and extremely specific. We'll look at the consistency from day to day. We'll look at the accuracy from trade to trade. We'll look at the efficiency from trade to trade. We look at the variance for the process day to day. We'll look at the profitability, either week to week or month to month, and so on and so forth. There are a lot of things that goes into training. Okay. Randall saying, learning the rules to basketball does not make a great basketball player. So true. And it's kind of the same with trading, right? So let's talk about the training. So again, it's just kind of like an evolution of Wyckoff Analytics from knowledge, again, WTC1, to skill building, which is WTC2. It's all about pattern recognition, sequential bias analysis, execution simulations, then to process. So check out our trust the process. Again, to get there, you at least need to be a WTC1 student. If you have any desire to go and to create the process, through where you create your trading process, your variance, and so on and so forth. We have a wonderful process manager, Franz, and he's been at it, I think, for the 4th year. So there is such an accumulation of experience, and he's doing such a fantastic job with a lot of individual traders, setting them up, to succeed, and not to trade kind of like in the unconscious way. Mindset and training, those are kind of like combined here, but still, and we have some specials on this, and I would absolutely recommend the specials that we have on the mindset, which include Gary Dayton's special. And then next evolution, it's training. Basically, we started training people. The identity of the company has changed. We had the pilot project in October, November, December of this year. The pilot went through, and it was a smashing success. Like, I was not expecting such results. I come from a very conservative coaching perspective of how people change. And in my view, it takes a lot of time for people to change. So with that, I was really, really reluctant and not enthusiastic, to launch the training, because I knew how intense it would be for me personally. But some of the things that we've achieved are just way beyond spectacular. I just was not expecting this. Very disciplinarian environment. I will not let you fail on yourself. I will make sure that if you're failing, you are adjusting really quickly, right away. And we had some failures. It just, you can't not to fail in trading. You're supposed to fail. You're supposed to figure out where you're failing and how to adjust that. And obviously having coach's feedback, which is like, so timely. And then the feedback throughout that adjustment is also extremely important. And the system, right? So we're talking about the system, we're talking about coaching, and we're talking about this. So this is a group commitment, and this is ingredient number 3, group commitment. The guys had to commit to this program, to this project. They have, and the results followed. So system, coaching, and individual and group commitment, that was the key. So what kind of thoughts do I have after this program? And again, this is something that I've been updating you guys, WTC2 students, throughout the last semester. I mean, obviously, I'm doing this with the purpose of you taking that next step. go through the process, establish the process, then after that, come to training and train yourself to be better, much better, way, way better in your time frame than you are right now. So some of the insights that I've gained as a coach in this intraday training programs. Traders often underestimate the commitment needed for consistent profitability. Think about it this way. If you're not consistently profitable, like year after year, and for intraday traders, let's say like day after day after day, right? If you're not there, then there is something that you're not doing, or maybe you're doing something incorrectly. So what is that commitment for you that will be required in order for you to become consistently profitable? You need to overcome some certain things that are going to be extremely mental things. Some are going to be very technical things that you just, not addressing. And this system, this environment allows you obviously, to correct this very quickly, because when you come to a training program, everything is on the surface. Like, not only I can read you very easily through your trades or through conversations that we have, through the analysis that we go through, but also everybody is in the room could do the same. And it's pretty evident where you are right away. So you are naked, you're exposed, and this is the place where we start. Pretty vulnerable place, don't you think? Not a lot of people can handle it. A lot of traders that come to us and then I have to say no, they go away by themselves, is only because they are unable to make that commitment to become vulnerable and just to say, maybe I'm wrong here, and maybe I should look at this, and maybe all of my mistake need to be exposed, to expose the ego behind that. Traders tend to overestimate their skills in analysis and trading, and we are extremely smart community. We have so many smart people, oh my gosh. But yet, behind that smartness is some arrogance. And that arrogance comes from that smartness. And it's very, very coy. But the ego controls that. And obviously, I've encountered a lot of traders, and even on our team, sometimes I sense it, overestimating your skills. So make sure that, you are in line with the reality. If you're not, then you're always gonna fail, and always gonna find the justification of why you failed. It wasn't me, it was somebody else. Traders often neglect to view trading as a craft and as a business that can support a living. This whole idea of, let's say, $10,000, $20,000 a month for a living as a trader, it's almost like a hope. It's almost like a dream. People come and they just like say, like, I want to do this. I want this to be my business. I want this to be my job. I want this to be my craft. And yet they can't make that commitment. They just not following through. And again, smart people, and I feel for them. And my suggestion to you is make that step for once. Make that step. Make the correct step. Instead of spending thousands and thousands of dollars over the years, over the decades, of trying to figure out which methodology is going to work better. What is the next indicator in Wyckoff methodology that I need to have? Otherwise, I will not make money. What is that next class that I need to take? Or maybe there is another practitioner that explains it differently and better. Or it could be completely other things unrelated, to education itself, to training itself. It could be something at home. So when you finally decide that this is what I'm gonna do and I'm gonna figure it out, I guarantee you that if you make that commitment and you're that vulnerable in front of me and the group, you will start improving. And that's the beauty of this whole thing. Trading beliefs often tend to be dogmatic and counterproductive. I mean, there are so many dogmas about trading that I kind of learned to almost hate. This whole thing about diversification, what a stupid idea unless you are managing someone else's money, unless you're managing your money and you don't have time and like you have to be a long-term oriented investor and all of that stuff. But if you're on a lower time frame, you have to be focused. You have to be concentrated in the specific assets and create concentrated portfolios. And even at the hedge fund manager level, which I spent on 3 years, you have to do that. You have to think about like, okay, we're gonna diversify into this theme, and we're gonna buy 2 or 3 stocks in this theme, and that's a diversification for us. But still, the focus and the weight of like how much of the risk we're gonna take on one single idea is going to be still concentrated and focused. So those type of dogmas that I really hate in trading, you should get rid of those as well. Awareness of choice in the moment is possible. It really comes to that. It really comes to the discussions that I have with the students, with the trainees, with any other traders, where they come to me and they say like, I saw it after the fact. And I always tell them that's good, because at least you see it now after the fact. Can you make one step forward and see it right after you made that mistake? Because that's the intermediate step between I've done this, I see this now, but it's too late, to, oh, I see it right now, that I am opening the position that is not, you know, characteristic of, let's say, like a bullish move that is going to be extended. That's awareness of the choice in the moment. Is it possible? Absolutely. How do you get there? Through practice. And you need to know how to get there. You need to have the algorithm, understanding how to get there and what to do with it, right? Because again, ego might overtake and you might be even afraid to do something, even though you recognize it. Restrictions, negative self-talk is crucial. That reduces resistance and allowing you to go into that flow mental state. At the advanced trading level, the primary obstacle is inherently internal, which is just self. We know that, and we work on that a lot. Trading at a higher conscious level involves continual process of self-reflection and swift mental adjustments. And again, this is a skill. This is not something that you either have it or you don't have it. You might have it, but you still need to direct it in the correct way. You still need to practice that. Attaining inconceivable results like consistent super profitability is possible. Yes, it is, and I'll show you the examples of those. This is not an empty statement. These are not empty words. I'm talking to you as a trainer, as a coach, as a teacher, as a trader who's done this myself, and yes, it is possible. Achieving professional status, which involves making a consistent living from trading, is challenging. It demands significant mental, time, and financial commitment. Financial commitment to get to this level is substantial. So it's much easier to buy the course for like, $50, to go to the free seminar on something where, people are trying to sell you something. But to step into that financial commitment where you basically buying a college degree and you're getting the college degree. I mean, like you're getting also not just the knowledge, but you getting the training behind that. And that requires that financial commitment. That requires a lot of time. I mean, like you have to be present each day. And it requires a lot of mental commitment. I saw people fail mentally right in front of my eyes. And you would never think that it would happen. And you never know the levels of extremes that you could go to, that you could overcome, and levels of extremes where you will fail. And you will fail, or you will fail for sure. But success in trading is a deliberate choice, and it's achievable for those who commits properly. So what is your choice? Blue or red pill? Yes or no? You're going to go for that or no? All right, let me kind of back it up a little bit, all of the statements. And these are the achievements. I'm going to kind of like go without trader number 7 because he joined us into the tail end of the program. Literally, there were like a couple of days left. So let's look at the first 6 traders. Trader number 1, what are the biggest achievements? 7 days of profitable streak in a row, 17 days intraday, making money. So ask yourself a question if you are an intraday trader. Have I done so? Have I done that? High daily consistency, high consistency on the process, quick mental adjustments. I like that from trader number 1. Less duration of unconscious mind, more positive attitude. And this all has been developed throughout these 2 months. Trader number 2 achieved the average of 1K, 1,000 per day twice in about 40 trading days. 40 out of 41 days were profitable, so that was a really consistent trading, high daily consistency, high trades consistency. We optimized, his trading identity. That was great, and then the results like magnified extremely. Extreme self-awareness. Major area of mental improvement is identified, so we know what to work on, and increased size. So that was extremely important. Trader number 3, I like the low emotional amplitudes there, simulation each day, commitment to the path, and we had 2 weeks of low daily consistency. So this means that for a week, the trader is profitable, and then, we have at least 3 days of profitability. Trader number 4, major commitment was made, understanding of what needs to be seen and done to get to that high level. Again, like people come and they just don't know, like, what do I do? Well, you have to commit this way. Can you do it? And then obviously it's your choice, because when they come and I say like, okay, you're gonna spend 10, 12 hours a day, would you be able to? And you're gonna say to me like, no, I can't because I have a job. Well, I'm sorry, guys. Like, that's the commitment. That's the requirement that it just needs there. And I apologize if I can't bring you other news. So you still could progress, but your progress is not going to be as fast. Okay, awareness of mental identity, 1 week of high consistency. So that was like that big achievement. Okay, trader number 5, $1,000 day, right into the end of the program. That was a great achievement. High daily consistency, 20 out of 23 days profitable, not in a row, but still during the program. 70% return since the inception, rapid mental changes, no weight on the path, stress-free. This is the most optimal trader in terms of the mental outlook. And then trader number 6, first week of high consistency. So as you could see, like when I say first week of high consistency, 2 weeks of low daily consistency, or like you have like streaks, like 17 days, 40 days, 20 days. These are improvements. It means that people came from some place where it was not like that. And then you see kind of like the results of this whole thing. Okay, what else? Okay, well, for those that want to enroll, this is your information. And then we're going to launch also the swing training probably into the end of January. So for those of who are interested, you could definitely still sign up. Not for the intraday, but for the swing. For the intraday, if you have any interest, you can email me. We could go through the interview. I would have to see like, what it is. Right now, I'm just really focused on the current group. We're doing January, June cycle. So I just want to focus on the guys there. And you have to go through the interview with me. I did say no to some people, just FYI, but you have to know where you are. at least reach out, at least kind of like see where you are. Okay, today, let's come back to WTC1. I'm just too excited about the training. Session number 1, introduction, homeworks, market update. We're not going to do this exercise on observations, deductions. I'm kind of restructuring the whole class right now. We're going to concentrate on the bias games. And yes, I do record this session. I am recording this session. Okay. For homework, we're going to go through these bias games. You could find those bias games on Twitter. You could find those bias games on our website. We'll need to update that a little bit. And then also for those of you who already signed up or you're going to sign up for this class, then obviously you will find that in your homework package for next week. So all of those 3 games, we're going to do those. I want you to also read the articles, 2 articles. One is actually a chapter from Outliers by Malcolm Gladwell on 10,000 hours. So quantitative approach to practice, and then mundanity of excellence. I really love this article. It's about the Olympic swimmers trials and who gets in and who doesn't and why. And this is all about the quality and the deliberate way of practice. I would like these 2 articles to be read only by WTC1 people, but I mean, like if you're an alumni, you want to read this again, go for it. It's totally fine. And we'll discuss this a little bit in the next class, and we'll talk about how do we actually view our trading path as we go along this journey, and what is required of us, how much time do we need to spend, and so on and so forth. So just want to show you guys that it's a significant commitment. It only seems so easy that you could press buy and sell buttons. And that's what's so elusive. It's just so simple, buy and sell, buy and sell. But you have to have the whole construct behind it. You have to have the correct narrative. You have to be in line with that narrative of the market, with your own personal beliefs about the trading, the money, and so on and so forth. And you definitely have to have the knowledge, the skill, the emotional component of it. And it's all kind of comprehensively together as a product of you trading. That's what we need to reach. Okay, market update. We're gonna go really fast here. Although this is the first class, maybe we should spend some time. What do you guys see? We're hitting the all-time high. We said in the last quarter of 2023 that we're gonna see the all-time high on both S&P and NASDAQ. Okay, so here's the all-time high right here. This is still pretty strong. I mean, we'll go into the construct of the swing itself, but if you were to compare, let's say, like this swing to this swing, to this swing, to this swing, what do you see? Definitely, this is one of the best characters. The best character also, here and here. Just a lot of velocity, a lot of momentum behind that. There is some demand or consistency of the demand, and we're definitely seeing, a lot of strength with the suggestion not only of continuation to the upside, but overcoming the all-time high. And obviously, there is a big question. Well, what about the rotation at the beginning of the year? Could that be? How could that look like? Yeah, definitely we could have something like this. Look how 2022 starts into the bear market. So you have to contextualize that, right? So we need to make sure that we see that. So what do we see at the beginning of the year? This, right? So we have that. But what is the character? I wouldn't say that this is extremely bearish. I would say that this was more bearish. Like this particular bar was way more bearish. Look at this spread extending. Look at this lower high. And here instead we're seeing like a slightly higher high. Today's spread was increasing, but not as much as this one or like this one right here. So it's a slightly different volatility. There were not a lot of volume signature, akin to maybe like what we had here, but still a little bit lower. So the selling is not that dramatic. Okay, so that still confirms the strength of the demand at this point. And then the question becomes, well, are we done with the current swing? Well, where is the reversal? So here is our area of the reversal, which equates to the point of entry for us. Along the way, we have other points of entry. We will not discuss them. But where is the swing reversal on the daily? Does this bar reverses the swing? No. Does this bar reverses the swing? No. Does this bar reverses the swing? Yeah, the last combo was reversed. So this is the first time when in this sequence we see the reversal. What an awesome trade right here, just based on the swing reversal. I mean, I keep telling traders, consider this as breaking the dogma about your trading. Don't think about the bias. Think about the swing reversals, or like the swing construct, and then the character. So if you think about the swing character, you could say that the bias is still bullish. I mean, there is really nothing else to say here. And then that bullish bias is going to be in the current swing and then in the test that comes afterwards. And only if supply starts to increase, and with that, we're seeing an increase in the upward downward momentum and result, only then we're going to start saying that there is a change of behavior, suggesting maybe more of a bearish type of character. And if it's followed by the change of character in price action, in price structure, that's when we could change the bias to bearish completely. So far, we don't see that. So far, what we're seeing is a pretty standard swing and a test. We're in the test of that swing. And currently, and as usual, the test is either horizontal or vertically down, and right now it's horizontal, so we have a trading range. And this is what we're looking at. The trading range has maybe less supply than on the way down somewhere here. I would be also comparing maybe like this area to this area right here. Do we see any analog resemblances in terms of how much volume we have, let's say, coming in right here, and how much less volume we have here? Also, how do we break to the downside? Could we break the local structure and then extend that break? That would be more bearish. Could we follow by the weak demand after that? That would suggest still continuation. So far, I do see that we are at the all-time high, and we started to deteriorate in the momentum of the demand. And I see that demand started to finally diminish from this to this to this to this to this. So these are what we call, are at Wyckoff Analytics, are preconditions to change. Now, preconditions to change does not mean change. Only when we see the structural change, that's when we're going to say like, yeah, something is different. And then obviously, what is the most important bar to the upside for us as of late, right? Because there are quite a lot of important bars to the upside. This one right here, this one, this whole area, just the takeoff. So when you have your buy zones like this, and you just basically saying, okay, look at the support 1, support 2. If reaction unfolds, how do we go through this? What is the character of that? And by that, you make that judgment as to like, okay, maybe we're changing the bias. So far, okay, we're just stopping. Could we go down? Yes, we can. We could go through this level and still be okay. We could go through even this level and still be okay. We could come to the mean of this upward channel and still be okay, and still could be bullish. I mean, look at this reaction that we've experienced in 2023. It went to the logical support. Now, I would most definitely like to see more of the horizontal type of reaction. Look at the verticality of all of the reactions. This is too steep, too steep, too steep, too steep, less so, right? And now I would like it to be more like this, flatter than anything before. That would suggest that whatever bullish character we have had on the last two significant swings, now the reaction is not that vertically down. So supply is not as strong, meaning that supply has been contracted, it contracted behind the absorption by the demand. And with that, suggesting a continuation. And a pretty logical stop in action here, right? Around the all-time high. And that's what price usually does. So if we have a flatter reaction and we still have some kind of duration to this test, that would be very, very positive. Again, not gonna necessarily, well, why not? Okay, let's do this. Let's go to 2016. This is the analog that I still would be using at this point, and we need to take into the account, obviously, election, which in 2016 was here. So we just kind of like a little bit ahead of the structure in 2023, 2024. But I'm thinking that we are somewhere here. And we just had this run, we just had this extremely bullish rally, and we've overcome some local levels of the resistance. And we're gonna go into some kind of test because the bullishness of this rally was too much, the extension of it was too much. We need a pause. We need for institutions to restructure their portfolios before they actually, start to put on more positions in the new year. But I think the key message here behind this type of bullish behavior is what happens next after the test. And what happens next after the test? Into the highs of the 2017, 2018. We definitely not gonna have this type of market. It's gonna be different, but we could slightly project, first of all, the bullishness of the market to the upside, at least for now, just because on the character and the test how it unfolds. If this were to change and the test just goes down and breaks like multiple levels, okay, we're gonna change our outlook. But for now, if it quacks like a duck, if it walks like a duck, it's an uptrend. All right. So with that, it's an uptrend until it's not, until it's broken. But there is a big event that's gonna come up, pretty soon in 2024 in this for the US, obviously. So what is that event? It's the election. And usually before the election, look at how in 2016, going into November, election night, right here, what do we see? Look at that, a trading range, some increased volatility, and then directionality takes, after the event. But before that, we are just waiting. This was Brexit. Also, look what happens before the event, waiting game. So I'm not expecting like a really, really great start to the year. I think that we are in that testing zone. So it means up and down, up and down. And overall, for the intraday traders, it's going to be a more challenging environment because if we're going to be in the uptrending environment, then volatility is going to drop down and you have to adjust for that. But for a swing trader, it's a perfect environment, especially for a short-term swing trader. You're going to have so many opportunities. It's all going to be a matter of your selection. Could you do the selection in a specific way that would optimize your points of entry? Okay, gonna show you the last thing. This is from WMD, kind of like 3-4 weeks ago. So here's that analog from 2016 election. Here is that election right here, and then going into 2023, 24. And we are here. So what do I see here? First of all, the structure to the left is the same, basically. Like one might argue with me, well, how do you see this? Well, I see this as a downtrend into 1. I see 2 as a major change of behavior. I see that it's being totally negated into 3, into the spring, which we see in 2016 going into a spring. 4 as the minus sign of strength. 5, it's kind of like this more of the horizontal flatter reaction, but into the event, Brexit, banking crisis. Then we go up into 6 and then we wait. So this is Fed, watch, and this is obviously election. And after that, it's all up, right? Look at the character here, then test. Look at the character here, now test. So that's how I'm thinking about this. So the question is not about what has happened in the past. It's not what has transpired, closely to what we're seeing right now. It's what's going to happen next. And that's the big problem, right? So you need to adjust it to 2 things. You need to adjust it, first of all, for the seasonality. That's number 1. And then you need to adjust it for the election itself. And here's the pathway that I drew for myself and for our WMD students for this year. I do not know whether it's going to implement this way or not, whether it's going to do it this way. It's just kind of like a drawing, taking seasonality and election and the bullish buys into the account. So after the first swing up, test, then continuation, and we continue with the upward momentum, but not of the same quality. Now we're diminishing the thrust, right? So momentum is diminishing because there was a lot of buying here and here at the bottom. So with that, we need to experience some diminishing momentum into the November's election time. So I would suggest that starting from June, early July, we're going to go into some kind of trading range with local increased volatility. But before that, diminishing momentum immediately after test, still some buying to the upside, and then we're going to diminish that momentum into May, July. So the concept of buying October, November, and then sell in May, June actually is going to work. So that's still going to be true. And then waiting for the election into some kind of maybe even spring event. And then after that, taking off again. Positive year, bullish, obviously, but less than in 2023. So that's my expectation. And my expectation is that volatility is going to actually go down, unless there is some kind of unexpected geopolitical event. Okay, unless. Okay, so that's kind of the prognostication. Ooh, 357. Where are we gonna go? Okay, I think that's it for the S&P. Obviously, it took a little bit longer, just beginning of the year. Counts to 5,800. Yeah, I mean, like I was not actually looking at the counts. Probably would have adjusted the whole model. Look at Nasdaq. Has been a leader, and this is the first to be sold, right? So, and look at this supply coming in. This is definitely an increasing spread. So this is better than this. So a slightly different picture for Nasdaq. That is still suggestive that we are under pressure here, and that selling could take us down. Where to? Well, at the beginning of the move, somewhere here. This is a very important level for us to to acknowledge. So still could go down and still be okay bullish wise, and still could be kind of like in this testing area in some kind of trading range. Okay, Russell as a swing showing that exhaustion, right? So we stated this was so healthy, this is so healthy, this is healthy, this is healthy, and then we started deteriorating right here. We're seeing how momentum is decreasing, spread is decreasing, demand is decreasing, and we are expecting some kind of reaction here. But at the same time, look at it from the perspective of the global structure. We said on these two bars, when they happened, what was our call? We said that we are bullish, and we said that we're going to have so much momentum, so much velocity, so much increase of the spread. And look at this beauty, right? That was like a perfect analysis right there. But on the global level, we said that type of strength will lead us to the higher high above this 3 attempts to overcome this level, and we have. And we stated that now we need to look, once it's going to happen, we have to look at the extension. And I would say that this is a typical kind of like extension behind the momentum in the background. This is where they don't buy either for the holidays reason or whatever else this is. And this is where momentum is going to deteriorate, and that will produce a reaction. Currently, we're in one. What are our boundaries? I'd say like this is like the most obvious, but you also could consider the last bar here to the upside into the resistance. And this could be your trading range right here, at least for some time. Okay. The Dow holding much better. And this last 3-4 bars actually were great. Trying to sell, trying to sell, trying to sell, trying to sell, and still closing higher. I think that maybe just, the gravity of the overall market might take it down here just because everything seems to be like reacting right now. I would say like this is the most important latest bar to the upside. This is a very important line right here as being an all-time high. Is it? Yep. Okay, so we're beyond that. And then look at the extension here. This is suggesting that after the test, we might actually continue. And if bullish activities will come faster, we might continue like almost right away. This is a much better selection, let's say, than NASDAQ, such a drastic difference. Okay, let's finish with the stock market. 10-year also was a really good call right here. We were discussing, would we break this or not? The idea was that we're going to break this as the character of the demand is deteriorating and supply is still pretty strong, starting with the change of behavior bars and then the breaks. So we stated that we're going to break this level, even though that was one of the most important levels here. As it breaks, you see how easily it goes to the downside, suggesting more to the downside. This suggests more to the downside. And there we go. We come to the bottom of this bar right here. So this was the most important bar in the previous decline. The equivalent of that would be something here. We would call it change of behavior bar. And then look at the difference here, right? So I would say that coming to this support, we are covering this ground, and then we should have rallied. But instead, what happens here? Even lower. So most definitely, this market shows that we are done with the tightening cycle. Look at the extent of this change of behavior. Way more meaningful than the previous one. And this was the beginning of the thought that Fed might go into the QE instead of QT. Yet, inflation still was very strong. And in this period of time, they decided, okay, we're going to do +2 rate hikes. And we're still in the QT. And look how it changed. And that's why we say like market is uncertain. It's just uncertain. I mean, like, how would you know? How would you know that the Fed would do this? Okay, well, you might say like, well, I was expecting the inflation, to still be high, and with that, they would just do that. Okay, well, how do you expect inflation to be still high and just be there, right, at that level? Because this is basically what it is. They don't want to lower the rates just because inflation is still steadily high. Okay, but this change of behavior is so significant, and it's more than the previous change of behavior, that this suggests that we might be done with QT, unless, again, something comes up. Okay, well, then what? What's next? Well, if this is a change of behavior, we are in the trading range, and it's humongous, and it's big. And I would be expecting, behind the deterioration of the momentum to the downside, right here at this area, I would be expecting some kind of rally. Where to? Well, maybe to this level right here. And then just staying here or staying slightly above, but actually never touching 5. So that's my expectation for 2024. A trading range with more bearish type of weight on the yields than bullish. And definitely that's going to be better for the stock market, although there will be some rallies here. So it's not that it's all bullish for the stocks. Okay, oil. This is definitely such an interesting puzzle, because right here we were referring to Russell 2000. Also, I could refer you to Tessie, which is just like was tracking oil really well and being ahead of it. So that was an easy trade, easy analog. And I was thinking that with this rally, with this takeoff, which is better than anything here, let's say here, even here, I'd say like this is more stable. But behind that is still not a very strong demand. This pattern of outperformance should come with the increased volume and increased demand signature. We don't see it here, and that's the difference. And then that is quickly being confirmed by what? By some kind of reversal. Last attempt to go up, which is failing, and then the reversal on the bar right here with such extension that suggests we're going to retest this lows again. And then today we're just seeing an attempt to go up and then selling into the close on increased supply. So still vulnerable. So I'm thinking that are we gonna do maybe like here something what we've done here? Could we just consolidate this type of way in this type of way? Or could we consolidate, show more weakness, and then continue to the downside? So right now we're gonna see what kind of test we're gonna have. Okay. Bitcoin. I mean, we've been pretty accurate for the whole uptrend. Our last statement on this was we're in the overbought condition akin to what we've had here. And this is what we're gonna do. Up and down, up and down. We could potentially continue going up here, but we need confirmations of absorptions. Look at, let's say, like several bars right here. So this is a volume spike, obviously, on decreasing spread. So we need to be, somewhat cautious about this. The only good thing about this, if the price stays above the local buying climax, then that would signify an absorption and would suggest some attempt to go up, to go higher. But look at this supply, supply, supply is the stop in action. Supply is a stop in action. So every time supply came, we see reaction, reaction, supply came again. So we'll have to see. But I on the other hand, I like how we are breaking the anchor point here, right? So here is the volume that required the stopping action, and this is actually trying to overcome this. It's just that there's no result here, and that's the problem. So I'd be still thinking something similar to what we have had before in the overbought condition. Consolidating, but having some local volatility up and down here and there, right? So, I mean, look at this, look at the up move, look at this, look at the up move. What comes next? We're still in the trading range right here. Okay. Okay, last one, gold. I know that we've talked a lot at how much of the supply came on this up thrust bar, and rightfully so. But at the same time, the continuation of it was not that aggressive. We're seeing diminishing supply, we're seeing diminishing spread, we're seeing how into the area of the buying climax we go, but we don't even touch it. We're still in the construct of the upswing. And with that, supply would occur at the all-time high. And what does it do? I mean, like, we always have to ask, like, what's the immediate result? We still in this bar. We still did not do anything with this bar. We did not overcome it to the upside, to the downside. We're still here. And I think that we're just consolidating. My idea from last year was that, you know, as we approach the all-time high, we're gonna consolidate. We're gonna consolidate, but we're gonna consolidate in the upper part relative to the previous move, or this. So somewhere here. And that is the backup of the backup. And obviously major backup. So that's what I'm seeing here for gold. All right. Enough of the market. Let's go build some skill. Okay, let me see some comments. Okay. Yeah, I like that we do not have the climactic volume here for the market. If it would be climactic, that would mean presence of supply. Supply in terms of selling supply, distributing supply. What we're seeing, you know, lately is just, yeah, definitely some portfolio rotation, some profit taking, reshuffling of the portfolios at the beginning of the year. So still have to do that, and that's being reflected in the price and the volume. So, all right, done with that. All right, let's go somewhere else. If you want more on how do we apply Wyckoff methodology to charts, to any assets that we discuss, and you kind of see like each Wednesday we discuss all of those assets, come to Wyckoff Market Discussion. I can't say enough about the experience and the knowledge that Bruce has, you know, my partner at WMD. And you, as with Hank Burton, I always would tell students, like, you gotta go and watch Hank teach. With Bruce, I would say, like, you gotta go and listen to Bruce's stories. You know, like, Bruce is a storyteller. So he's gonna go into such depth of like why things happen the way that they happen. So I absolutely would suggest to you, if you want to see Wyckoff method in action and just compare your analysis to ours, to join us for the Wyckoff market discussion. It's on Wednesdays at 3 p.m. Pacific, and we usually have so much analysis and just a blast, to work with Bruce, to work with all of the people. Also, we have some, daily up and down, tournaments that we do in the WMD. So it's just like every class is a fun. Does Bruce teach his PNF accounts for price targets? He does, but on demand, correct? So please go check in the on demand section. We've completed the PNF course. That is the kind of like a hybrid course from every other reiterations of the PNF courses that we've done before with Bruce. And there are 4 of those. 3 was me and 1 was Alyssa, and Bruce was in all of them. So we combined all of them together. And now we have one comprehensive PNF course, so check it out. I also want to point your attention, for those of you who are into the analysis of the long-term picture, the business cycle special. And Joe Turner, who was a partner to Martin Preen, and Bruce was a partner to Martin Preen as well. So 3 of them were partners at some time. Joe was the money manager. Joe taught at Golden Gate University together with Bruce, Hank, myself. And it's just an amazing tandem. They have decades and decades and decades, close to 100 years of experience being in the marketplace. I mean, how could you top that? I know for sure I can't. I've been at it since mid 90s, so it's going to be 30 years this year, next year, and I still marvel at how Bruce describes things. So absolutely a must if you are a long-term campaigner, or if you just want to understand how it works. February 1st, February 8th, February 15th. All right, with that, this is it. Let's go to work. Bias game. Okay. Need to figure out how I'm gonna do this. Okay. Why don't we do this? So here is your first task. Here is your first bias game. And with that, just thinking, let's have volunteers. Yeah, let's just jump into that. Let's not wait. Say yes if you would like to volunteer, and I'm gonna pair you up. We'll have 2 students going through this. Okay, let me know if you're ready to jump into it. If not, I mean, like, I definitely could help out. Okay, so I have 1. Someone else? Okay, let me see, going once. People are saying, I'll do this. I'm not sure what you're asking for. Yeah, I'm gonna ask you guys to kind of like do it together. Okay, so I see 5 people, right? So we're gonna save Eric maybe for later, Eric, okay, because you've done quite a few. Okay, let's go to Neil. Okay, so Neil was the first one, and we'll try, multiple people. So let me find people here. I'm gonna unmute you. You have to make sure that you have your microphone. Neil, are you there?
Yes, can you hear me?
Absolutely. Okay, and thank you for sending, those trading ranges. I appreciate that, and we all appreciate. And then let's go to John P. Okay. Hey, John, I unmuted you, so you should unmute yourself and you'll be able to speak. So there is the microphone button to the left of your name. You need to click that, yeah. John, are you there? Okay, I see that you're unmuted, but I cannot hear you. Ah, the mic might not work. Okay, no worries. Let's go to, okay, let's see who else. Cleve, okay. All right, Cleve, am I pronouncing the name correctly? If you unmute yourself. Are you there? Cleve? Yeah, technology, and I can't hear you if you speak. Okay, I think that he had to log off. Okay, let's go and do it with Eric, because we know that Eric is most definitely going to be okay with all of that. All right, so I'm being told that the sound check was not great. Eric, are you there? Eric
Yes,
C?
yes.
Okay, great. Okay, Eric, so you know what to do, right? And you've got Neil here. Neil, are you there?
Yep, you bet.
Okay. Eric,
Hey,
I'm gonna make you an organizer so that you would have actually allow drawing. Okay, here we go. And Eric, you're gonna have the drawing tool so you can draw.
Okay. Okay. Neil, welcome. How are you?
I'm good. Happy New Year
Good.
to you.
I'm good. So first of all, get an orientation from left to right. I'm seeing this trading range here, and I'm seeing this downtrend come down this direction. You in agreement with that?
Yep, into a selling climax at the bottom of your line, I think. Okay.
Yep. We call this, as you probably know, we call this a significant bar. So you've got a stopping action here. And then this is a change of behavior bar, because if you look at the reactions or the rallies, this is a pretty good rally at the end of it, and it really moves the trading range sideways. So from this point going forward, we have a trading range going this way. Would you agree with that?
Yep. Yes, I do. Yep.
Okay, and I don't know if you can see my drawing, but something like that. So big downtrend coming into trading range. We see volume kick in here. We see there's a lot of selling down here, which is bearish, and coming into a trading range. So if we look at the trading range, what do you think we should start looking at first when we get in here?
On the automatic reaction, it's a fairly strong reaction, but it doesn't really overcome that last downswing.
Yep. Yep. So it's a weaker automatic reaction. It doesn't take out this large bar here. There's some demand coming in here. So is it confirming or disconfirming this big reaction?
Eric, by the way, if you are drawing, we don't see what you're drawing. You were talking about this automatic rally, right?
Yeah, let me get the pen. Yes. Yes, right here. You see the pen? Okay, there it is. Okay,
Yeah,
I'm sorry.
now we can see it. Yeah.
Okay.
Just want to make sure that if you're drawing, so that we would see it.
Okay. So there's the rally, and then the reaction isn't as deep. So some buying is coming in here. And so this looks like it has stopped for now, this down reaction. And we would conclude that at this point, we are going into a trading range, which we talked about. Okay.
Right.
And
but I would say we're still bearish overall because we haven't overcome the downswing.
Okay. So we're still bearish to this point. Still bearish, nothing's changed, bias hasn't changed. Now, if we draw this trading range in, and to me it looks something like this with all this price action up here, and then let's look at the rallies. So we'll draw this rally in, we'll draw this rally in, we'll draw this rally in, and then this rally in here. And then there's a couple small ones here. So what do you notice about the rallies?
Yeah, the rallies are in, the last rally particularly is much stronger than the prior.
Yeah, perfect. So let's just go back and say this automatic rally to this automatic rally. Which one looks better to you?
The first one, I think, because it's very vertical.
Okay, let's look at this rally to this rally.
Probably the first one again is stronger.
Okay, and we have then this rally to this rally.
Likely the first one again is stronger.
So this is weaker. And then we take this rally, which is really a change of behavior rally, sign of strength. This rally to this rally, we would probably agree that this looks stronger, correct?
Yeah, correct. Yes, I would.
Okay. All right. So let's just go take that off now. Let me just take that off, get some noise out of there. And I think, Ramon, you have to clean it up. So if we just go back here, let me get the pen back and let's just do the reactions just to show people that we'll do both sides of this argument. And if we look at the reactions in trading range, if we look at this reaction here, reaction 1 to reaction 2, which looks more extreme?
Reaction 1 is more aggressive, I think.
Okay, more aggressive. This is a little bit flatter. This comes down quicker, shorter duration. This is a little bit flatter. This reaction to, let's say, this reaction here.
Probably the reaction, the last one, maybe a little bit more aggressive, just marginal, but yeah.
These are getting a little bit more aggressive. So if we looked at this reaction and then this reaction, looks like we actually break structure here and it comes through. How do you compare this reaction to this one?
I would say the last one's probably more aggressive because of its movement.
Okay. All right. And let's just go, let's compare. Well, this reaction is sort of hard to compare on its own. We have this reaction compared to this little reaction here.
Yeah, the last one is much more depth of price move.
Yeah, so we've noticed something here that the reactions are definitely getting a little bit stronger as we go through the trading range. We definitely know the trading range is in this area here. We see this here, lots of volume increasing here, supply increasing, and some demand, but there's obviously a spring-like activity here. And then the results of the price movement outside the trading range. If you look at this area here above the resistance, is there anywhere we want to compare this to or look at on the other side over here as an analog to this area of price action here? Probably not, right? We just have this downtrend here.
Yeah, unless that there is a strong reaction in that downtrend there where there's 3 really strong up bars back halfway down that downtrend, and then it struggled at the top of that and then gave way dramatically, whereas this one seems to be a slower decline.
Yep. So doesn't this break structure in here? There's a break of structure. This, to me, it's fighting resistance here. So resistance, it comes through it on a pop of volume. That's fantastic. We see that. But then why doesn't this continue? This gets pushed right back down, and it does hold back at support now, which it should, because resistance becomes support. But it breaks through that support again, and it starts coming. It's on less volume.
Yeah, very little demand there. Yeah.
Yeah, so my mind, we have this exhaustion coming down. We have some of the bigger volume levels here. We have volume here, here. We definitely have supply coming here. We have good demand coming here, but then we have just a really decline in volume, and overall demand is looks like it's petering out here. So based on our limited analysis of 10 minutes or less, what do you think this is? Is it a continuation of the downtrend, meaning distribution, or is it a reversal of the downtrend, meaning accumulation?
Yeah, the part that I find a little bit hard to grasp is at the very end here, we have no demand coming in and or selling, right? You would think that the selling would increase as well, but I think I would vote for distribution.
Yeah, I'm thinking, Ramon, I'm thinking so too, because I just think there's this background, precondition, lots of selling down here. It takes a breather down here. There is a gap up here. This is a spring, but you'd want to see the spring continue. It could be on news, and then I don't see why it's not continuing here, and then maybe even like a shallower backup action here. It seems to come right off this, break structure, and hold here. So my guess is that it's got some selling taking place towards the end of this.
Mm-hmm. So distribution, guys, right? Is that
Yeah.
what you're waiting for? Okay, let's ask our guests and students. What do you guys think? Never cleared the first break, Kenneth saying. Yeah, so definitely we're seeing that this is the most important event on the chart, right? So try to identify that and then just play everything out of that. So here is our selling zone. What does the price do? Every time tries to go up and fails. And I would also be thinking, in terms of the segments, right? So usually I show you guys like, okay, think of the downtrend, right? How does this look? This is pretty aggressive. This is very aggressive. And then suddenly momentum is decreasing. Okay, so that's the structure of the downtrend. And we're seeing how selling has diminished. And I think that Eric has mentioned like, okay, well, now we have a breather, right? So some demand is coming in, and then out of the spring, we have this rally. This is the best rally. What does the best rally achieve? What is the result of it? Into the selling zone. So can't overcome. And then if you would identify like, excuse me, this is one area, this is the second area, and then this is the third one. Then we're seeing that in the third area, what do we see? Event, right? So some kind of increased volatility, increased volume. What is the result of all of that? And we're seeing how easily we break first bar, how we intrude into the second bar, and look how aggressive this is, right? So is selling aggressive? Yes. Is selling better than buying in this area? Yes. Selling dominates the demand. And then on the demand part, that was such a great observation that both of you have made, is just there is no demand. There is nothing that is going on here. So that what kind of attracts me here to call this the distribution is that demand is not present after so many attempts to go up in a significant way to push the price beyond the selling zone. So this is a very good visual clue for us right here. By the way, remember how we usually would discuss, let's say like some kind of emergence of the volume signature. Something's going on here in price. And then let's say volume just starts to go down, and we refer this to the area of the inactivity. It could be like a triangle developing. It could be something else. It could be maybe some downsloping trading range like we have here, like here. But usually the result of it is the bias in itself. It's almost like we're gonna say like, yeah, we see that something has happened, volume has come in. What is the immediate result after that? To the downside. Can we confirm it through the demand? Is it weaker than supply? Yes. So dim supply still dominant. So yeah, I would say distribution. Let me look it up really quick. Okay, yes, confirming it's a distribution. Good job, guys. Obviously, we'll adjust this. And for those of you who are in WTC1 class last semester and you're coming in into WTC2, you're asking yourself a question, well, how's that different? Well, Eric is our instructor now. So definitely he knows where to go, right? And how to like maneuver around the sequential bias analysis. But in the next class, we're going to study what is sequential bias analysis. I'm going to give you a step-by-step algorithm as to how do you analyze the trading range. And that's the work that we're going to do here. For those of you who are here with the question, should I sign up or not? That's the work that you will be guys doing. And I want all of you throughout the semester when we have a smaller group, because this is the first open door class and so on and so forth, it will be public and, you know, obviously, you know, some of you might be a little bit reluctant to step into this. But once we're in the smaller group, that's it. You know, like we'll make sure that all of you will try doing this and going through the sequential bias analysis. Okay, Eric, Neil, thank you so much. Okay, let's go to someone else. Good job. Okay, who else would like? I saw Rick, right? And I see some comments here, so let me just go through this. Distribution and the last reaction, there is an ease of movement to the downside. Neglected the last two significant bars to that, okay. Also, can we argue there is not much quality buying? Yes, also, yes, yes, and yes to that, Joe. Okay, let's go to Rick. I thought I saw Rick. I wanted to, hey Rick, how you doing? Rick W. We've got two Richards. Okay. Rick, are you there? I am muted you. No, not there. Okay, who else would like to volunteer? And who has the microphone? Iqbal? Okay, let's go. All right, Iqbal, you're unmuted.
Hello, can you hear me?
Yes. Here we go. Okay, well, let's just do it together.
Can you hear me?
Yes, I can hear you. Okay.
Hello, testing.
Yes, yes, I can hear you. Can you hear me? Iqbal? Can you guys hear me? Am I having some audio problems today?
No, we can hear you. You're good.
Yeah, good, okay. Iqbal, you can hear me, right?
I can't hear anybody. Let me try something. Hello? Now I can hear.
Yeah, you can hear?
Yes, I can hear.
Okay, great.
I
Lamont,
just turned my.
you might want to take back the pen as well, okay?
Yeah, no worries. Okay, Iqbal, so you're familiar with this. You've taken this class many times. How many times did you take this class?
Oh, I think 5, 6 times, I think.
5, 6 times, yeah. So we're not gonna go into like, oh, do this or do that. So we're just gonna quickly kind of like go through this. Okay, what's the background?
The background is an uptrend.
Okay, now let's identify the class climactic run. Where would you say the climactic run is?
So there's the volume came in an increasing fashion at that, if you where you drew it, right there.
Right here?
Yeah, right here. There was
Okay.
a spike in volume. That's when first supply came in there. Then there was an upthrust which did not make much progress, quickly came down in a climactic fashion. So I would say, to me, the climactic return or the rally is, to me, the rally appears more climactic than the actual climactic top of the selling itself there. at the top.
And what does
So
it
that
mean?
is it's a significant change in behavior to what has been going on in the prior move up.
Yeah, definitely very aggressive, right? So, and we have the definitions for the change of behavior, right? So here are how many support levels that we're breaking through.
We've broken 1, 2, 3, and we committed below.
Yeah, so I'd say like this whole thing you could consider a climactic run, and it's negated, and a lower low is being formed as a change of behavior. Bullish or bearish?
That's bearish.
Bearish, and bearish almost immediately.
Yes.
By the rules, just because of how it breaks so many supports level. You would have to seek some kind of confirmation that comes, that you could extract from this rally. So here we see this is just a preparation for this rally. So these two are connected. So do we have the rally that confirms or negates the
The
bearish?
rally is, if you look at the rally has a lot of hiccups. It goes up,
Yeah,
comes back, slams down, goes back up again, then slams down hard,
yeah.
and then slowly it tries to go up, but it just barely reaches up there, and then suddenly there's another significant rally or pullback or whatever you call that, which takes the price all the way down to below the change of behavior bar, and to me that looks like a sign of weakness.
Right here.
Right here.
I apologize. I look at this chart and I'm like, what is this? Is this a Chinese chart right here? Look at this.
It's
The
red.
red bars. Yeah, I have to like go back and double check on this. This is pretty strange.
Yeah.
Okay, so just don't look at the color, just look at the structure itself. Yeah, I would agree. With the sign of weakness here, we're definitely still in a very bearish kind of like mood here. And I would be saying, like somewhere here, we had an excellent point of entry, just because we overcome this by a little bit as an upthrust, and then look at how volatility increases, volume increases in this area, and we're still negating any attempts to go up. So a trade like a swing trade right here is definitely good. Okay, but sign of weakness reverses relatively fast.
Yes.
So how could we interpret that? And I would say like maybe just to divide this into two parts, 1 and 2, right?
Right.
So the first part is definitely bearish.
Right.
What about the second part? So we have a trading range here. Remember how in the complex structures we would state like, okay, if we have a complex structure and we have a mini structure within another structure, we really need to go to that trading range and decipher the trading range right there.
So if you look at that from that perspective, then the question is, are we seeing a change of behavior? So the first rally doesn't really look like a change of behavior because it slowly, barely goes halfway up to the high. So what does it achieve? It achieves at halfway up. How long does it take to do that? Quite some time. And what's the character of the rally? It's laborious. It's clearly, you can see it pushes up, down, up, down. I mean, it's sweating it out to reach that stage. And then finally, there's a climactic run into that top. And then suddenly volume comes in and the price goes down.
Okay.
So
that probably re-engages us with the bearish outlook from the first part.
Right.
Okay.
And
what
then the
does
price.
let me just kind of ask you this. What does this bearish behavior, let's put it this way, what is the result of it?
So it didn't really commit below support. It stopped above support. And then it showed evidence of a shortening of thrust as well as drying up of supply. And it actually bounced right at support. So there definitely is,
How's
there
the
was a push.
bounce? Yeah.
So the bounce is, this is probably the best bounce in the
Mhm.
entire range.
Interesting,
Uh,
right? So
yeah.
like here, we would be comparing this to this, right?
Mhm.
We
Right.
would be comparing this to also maybe like something like this.
Right.
Yeah, it definitely looks better. So more bullish
More
here.
bullish. Yes. Mhm.
Okay. All right. So then let's
Then it
just put it
stopped.
like this. One,
Yeah.
two.
And oh, great. Now it stopped right where we would expect it to stop. There was that significant bar, that gap, and understandably, there's a lot of supply there. So we would not be surprised to see a pushback from that area, and
Mm-hmm.
price goes down, but it goes down on diminished supply.
What else? I mean, like if we were compare, let's say 2 and 4, what is more aggressive?
Who's more aggressive?
2 is more aggressive. Okay. Then let's say, let's go to 5. Okay. Then let's compare 4 and 6.
So it's interesting that the 6 uh, appeared to be more aggressive, but it didn't achieve much. Price couldn't commit below support. So with all that volume that came in, the result was poor. So I'd say
Yeah.
4 is more aggressive than 6.
And I'd say that Iqbal has been around and he is very already kind of like knowledgeable Wyckoff. So, I mean, I've known Iqbal probably, what, 10 years or so, maybe around.
Yeah, I think so.
Close to that when you came to us. So yeah, please note what Iqbal is saying. Like even though 6 is more aggressive than 4, but what is the result? Right? So result is that we can't achieve anything. With more aggression to the downside, suddenly we can't achieve anything. So it feels to me, Iqbal, that this area is kind of changing from this area right here.
Correct. I'd
And
say this. It's interesting that the latter half of the range is the true change of behavior here.
mhm. Okay. All right. And then let's compare 6 to 8.
So supply is really diminished out there.
Mhm,
And if you look at 6 is better than 8. So 8 really is a very poor
mhm,
effort in selling, both in terms of volume as well as in terms of distance.
mhm. And that comes after this event. So again, identify those big events on the chart with the volume signature or the gaps, and just look what happens afterwards. Because right here, one of the things that was not said at 6 is that what is it that we're seeing here?
So we're seeing an emergence of demand,
Yeah, some demand is coming in.
right?
Mhm.
And then
Okay.
and after that, when since supply is diminishing, you don't need much demand to go up. So the price is slowly feathering up to 7. Then it
Mhm.
tries to push down, but the result is probably the poorest result in the entire range. So
Yeah.
I am actually very bullish there.
Okay. A question, a very legitimate question. I mean, like we went through the selling and we've seen that, okay, yes, we acknowledge from this to this to this to this to this and to this, selling is diminishing for
Right.
sure. Okay, could we address the buying now in the same area? So let's just say like around this area right here. How would you assess the buying? Number 1, 2, 3, and then 4.
So in number 1, what buying achieved was that it stopped price halfway in the range. So the price could not go down as far as the support. And when demand came in, it slowed down the drop in price significantly. So that's evidence that there's demand there. And then after
Yeah.
that, right after the demand, when you say that, okay, if there is demand, then demand should prove itself. And I think in number 2, demand did prove itself that, yes, I am there. And it pushed the price up into that selling bar, the selling gap.
Mm-hmm. Yeah,
Subsequently,
into the upper part. Mm-hmm.
right,
Yeah.
and then subsequently, As selling starts to diminish, you can see the turning of the guard or changing of the guard here. You can see that the down moves are progressively getting smaller, and the up moves are tending to uh, uh, have more strength with diminished with less demand, as you call it, less demand and supply both. So there's an ease that the price is moving up from there.
Well, how about this question? And I think it's a very legitimate question. Ken is asking, well, I see that, demand is present, but and the reactions are diminishing. But what about the demand overcoming the selling zones? None of those selling zones were overcome. And I think this is a correct question to ask. What would you say to that?
So I would say, you know what, if you let's look back all the way to the left. I mean, look at that bar, the most aggressive bar. If the selling needs to be overcome, you need pretty significant demand to overcome that much of selling. I mean, there and then thereafter there was continued selling till the upthrust, and there was still selling in the biggest down rally there. But then
This one,
after
right?
that, yes. So if you look at it cumulative, that is a huge amount of selling that has to be overcome, and I don't expect that to be overcome with and the amount of demand that you need to overcome that is huge. But I'm impressed by the fact that demand has been able to stop price from going down. So I'm taking the counter argument. Okay, demand hasn't been able to break through, but on the other hand, it's holding. Its shoulders are strong. It's holding, and now it's absorbing the supply, getting ready to break through.
Yeah, interesting. Yeah, I'd say like supply has had a chance right here.
Right.
And it just doesn't move the price lower. And then as we go through this structure here, it just, it shows to us that the demand is more in control. So in some instances, it could be temporary, right? So demand assumes the control temporarily, and then supply aggressively comes in.
Right.
But if you're given this particular picture, you have to go to kind of like through the whole story up to this point, and it seems to us that there's some kind of change of behavior. There's more bullish behavior, but there is no structural change yet. But remember, guys, that the character of the price and volume will change first, and then you will see the structural change. So this bias game might be like that. It's just based on character alone, and we are identifying a more bullish character, in the right side. Okay, let me see the answer. So are we good with the accumulation?
Yes, accumulation.
Okay. Okay, just to double check that this is correct. Yes, accumulation. And the way how the price unfolded after that was kind of like a move up right here. So this is a local break of this area first. And then with the gap up and a lot of volume signature, as you said, that it would require so much demand, right, to overcome.
Right. Absolutely.
And with the gap up, it started to move up. Now,
Right.
this is a point of entry. I know that a lot of you would shy away from this, but something that Iqbal said that it requires more demand to overcome, this type of aggression to the downside. And here it is. It came just later on. The goal of our bias game is obviously to teach you guys to recognize the preconditions before the know-it-all bar, which is basically the gap. The gap itself is a know-it-all bar. So well done, Iqbal.
Thank you.
Picking up some of the bullish characteristics right here. Pretty difficult bias game, by the way.
Well, thank you for your excellent teaching. It has guided me all this way.
Okay, well, absolutely, absolutely. Is there an apex here from France? Yeah, I'd say so, France. Now I would be thinking like, what's what's the determining bias of the apex? I probably would be referring to this rally right here, just because we use these lines. So would be thinking that it's still to the upside, but this and especially this, so much. Actually, am I correct here? Very like, I don't like that we have this. It looks like a Chinese chart. I don't know why this happened in this bar again. Okay. Yeah, let's come back to the idea of the apex maybe on a better chart. I apologize for that. If you have a point of entry in that area, how do we set up a stop loss from Joey? You could definitely set up just a stop buy as the price goes through. Then you're in the position. You could wait for this to happen first, and then just initiate the position. I think to the downside, you're just basically waiting for some kind of increase of selling and some kind of increase of the local result. So that would scare me as more of like a continuation of the same type of aggressiveness that we have seen before. So would be thinking about those things. All right, next one. We still have around 30 minutes. Okay, is this the correct one? Okay. Actually, no, this is not the correct one. I don't know. Let's do. Okay, let's just do this one. Okay, volunteers. Who else wanted to go on a? I didn't call your name. Anyone else? Don't want to volunteer people today, so step up, step into it. Okay, let's do it together, right? All of us? Okay, let's do this. What is the immediate background? Up. So the bias here is still to the upside. Okay, something very interesting right away catches my eye. So much volume signature. And what happens on this volume signature? Change of behavior. Do we break any support levels? Say this is our support level. This is our local support level, some minor local support level. Wouldn't say that this is too aggressive, but I mean, like, that's vertically down. And look at how much supply is coming in. Oof, that's a lot. So right away, we want to notice this. Okay, and then how are we rallying after supply has come in? How's the rally? Weak. So this still confirms that there is something is going on and demand is diminishing. So this is more of the sequence where supply is increasing, demand is decreasing, more bearish. And look how we're breaking into the minor sign of weaknesses here, and obviously a local spring. Okay, so is this minor sign of weaknesses a strength or weakness? Weakness. Okay, and with that, we're still thinking bearish globally, but then, if we would look into, let's say, like this portion of it, and then this portion of it, and this portion of it. So 3 reactions, 1, 2, and 3. Okay, What do we see? 1, 2, and I guess this is 3. Okay, what is the extension to the downside? Decreasing, shortening of the thrust, right? What does this suggest? A rally. Okay, how does the rally take off here? Aggressive, non-aggressive? Not the best. Yes, agreed. Non-aggressive. If this is a non-aggro rally that we're expecting, where would it go? What's the target? Previous stopping action. Okay, so kind of unusual. So much volume is coming in. What did they do? The price went down. So they were selling here. It was not just the profit taking. It's just like something completely different. Okay, so then on the rally, do we have a confirmation that demand is expanding? Relative to, let's say, like this area right here? No. So demand is diminishing. And we stated that the takeoff was not that great. So our expectation, we're going to go to the target somewhere here. What is the character of the rally? What else could we say about the character of the rally? How about this? We said that the takeoff was not that impressive. How about the breakouts? Here, here, and then here, and then here. What could we say about those breakouts? First one, pretty okay. Second one, best up bar, and yet, do we extend above the resistance? No, this is a negative extension. What does this suggest? Weakness. Therefore, we're thinking that even though the up bar is good, and we're thinking like, yeah, we're probably gonna hit the target, if not slightly overcome it, like in the upthrust manner, but this is definitely weak. It's confirming the takeoff character, and it's confirming that the selling was significant in this area. So I'd be thinking here, okay, it would be a suspect for me, you know, for any more selling to come. But because there was so much selling should increase, but probably not overcome the size of what we already had. Okay, as we fail to break out again, look at this. This is the last attempt to commit to the upside. How do we reverse that? Strong, weak. Look at the extension of the breakdown bar. I mean, if you want to take like a local structure here, steel, look at that. The majority of the bar is breaking through the local level on increased extension and increased supply. Bullish or bearish? Definitely bearish. So we're still under the impression of this distribution, I would say, right? And then supply comes in again, and we still thinking bearish. Did we break the previous levels here? We broke it here. We definitely broke it here, but temporarily, right? And then out of this, we're seeing a mini structure right here that shows diminishing supply and suggesting what? With the diminishing supply and an ability to break through, we are expecting a rally, not necessarily a change of behavior. We do expect the reversal because we're expecting the rally, but we are not necessarily expecting a change of behavior. It might come as a counter rally, and you know that rally might not necessarily be the change of behavior. Okay, so then we're expecting the rally to come just because supply locally has decreased. The rally comes. Is it a strong rally or is it a weak rally? Definitely weak, you say. Okay. How would we compare, let's say, rally number 3 to rally number 2? Which one is more aggressive? Which one is better? Yeah, 2 is better. So we have a deterioration from 2 to 3. Okay, so expectations of the rally materialized, the rally is weak, and we come to the most important bar right here. Here's our selling zone. We do not overcome that. Okay, so with that, we go back, we go into the reaction. Supply is coming in again, supply is locally increasing. We do have decrease of the supply going from supply 1 to supply 2 to supply 3, definitely deterioration of the supply. But we have also definitely seen that demand is not that present either. So it's the picture of where supply is more visible, demand was more visible in this area right here. Now it's exhausted to the point where it can't really produce anything, any type of, good rallies. And then let's assess. So this is 2, this is 3. How about 4? No, let me just redraw this. Okay, how about 1, 2, and then 3 in terms of the reactions? 1, 2, and then 3. Do we still see some kind of, continuation here with the reactions, even though the 2 is most obviously the most important one, right? And this is a major change of behavior. This, by the way, breaks multiple levels of support. Look at that, right? Like it has done less so here, but in the previous game, we kind of saw that type of move to the downside is too aggressive. So that is suggestive of the change of behavior. Okay, how about this? The last thing that catches my eye is this rally. Look at the takeoff here and compare it to this, compare it to this, compare it to this. What do you guys see? Better or weaker? Yeah, last rally on declining demand, very weak, weaker. Yeah, so weaker. So we're seeing, like if we would create the whole Wyckoff story, we're seeing presence of the distributional supply that takes us down. Then supply is exhausted, cannot produce movement to the downside. With that, we're expecting the rally. The rally comes, it's weak. Demand is just deteriorating throughout. That suggests reaction. Reaction comes in, the character of the reaction is too aggressive to call this bullish. And with that, we are waiting for deterioration of selling, which comes into this place. That suggests another rally. This rally deteriorates even more than this one, and then supply is still present, and supply still moves the price down, even though we didn't produce any lower lows at this point. But supply is definitely in more control than demand. And then the last rally is just a very, very poor rally with no demand. So we're seeing how selling comes in, establishes itself, and then continues to press, on the price to go down. So what are we thinking here, guys? Distribution, because I'm kind of like maybe talking more to myself here. Like it feels to me like supply is dominant here. Distribution. Anyone that would go for accumulation couldn't and be scarcity of selling accumulation. Randall, what do you mean by that? Scarcity of selling couldn't and the scarcity of selling accumulation. Randall was saying. I see. Okay, couldn't and the scarcity of selling. I would say this, Randall. If I were to look low quality selling, okay, I understand what you're saying. I think that this is a good argument to consider, right? So, and we stated this, that selling has deteriorated. Is this what you're talking about, Randall? Right? Okay. So then how could we say that with deterioration of selling and we didn't really produce the result, that we're going to go down? Well, because we need to look at the opposite as well. Sometimes, again, you might have some kind of event that's going to produce a lot of volume, a lot of effort, and then this event defines everything else, right? So, and volume starts to go down. So when you see those type of situations, you need to understand where that effort came and what happened immediately after. And to me, this reminds of the same thing. Even though supply has deteriorated, but it's supply that has produced this initial event, I think, throughout the whole trading range. And then it reconfirmed itself by appearing 2 times more. Meanwhile, demand has no case. And we look at the volume signature, what is happening with the demand in nature of the case? It's just deteriorating. And with that, if we look at the progression of the, let's say, reactions, yeah, especially after this change of behavior in this part, look at the reaction, look at the rally. What is better? Definitely more aggressive, the reaction, right? Look at this reaction and look at this rally. What is more aggressive? Definitely this reaction. So Randall, you might have situations where, let's say, selling deteriorates, but because buying has been exhausted by selling here, it just doesn't appear, it doesn't occur, it just goes not completely away, but it's diminishing its effort, it's diminishing its strength, and behind still lower supply, it just shows deterioration. So much energy get exhausted, so selling eventually causes distribution, so much effort over time, exhaustion. Okay. All right, let me just double check. Am I correct here? Not. Yes, okay, great, distribution. Yeah, and the price here went down quite significantly and quite quickly, right? So demand is so exhausted, velocity is gonna increase. And that's what happened here. Okay, let's go to the next one. We are at 5:11, so I think that we could do one more. This is going to be pretty challenging, so let's skip that. Yeah, this is even more challenging. Okay, let's come back. Let's just do it, step by step. Okay, and by the way, guys, for those of you who, who's going to be in the next class, we're going to go through all of those trading ranges. So you might as well just, start practicing. Okay, anyone wants to volunteer? I think because it's an open door class, so people are. Okay, Joey. Okay, let's go. Let me find you. Okay, Joey, how you doing? Joey, are you there? I cannot hear you if you speak. Something with the microphone? Yeah, guys, make sure that this semester you have mics, will work together. I mean, obviously, if you just want to be an observer, that's fine as well, but would love to get you out of your shell a little bit, and in a more private environment where the class is more limited, in terms of the numbers. Yeah, let's do it. Let's do it. I want you to improve. I want to go through this with you together. This is such an opportunity for us to go through maybe like 5-7 bias games each class, and you step in and you just go through this, just feel it a little bit more, connect to it in a more meaningful way. And obviously in the next class, I'm going to be talking about the sequential bias analysis as a sequence. I'm going to give you those step by step. We also going to talk about some other nuances. How would we be maintaining our process, going through the bias gains and so on and so forth. I'm thinking that we're probably gonna have the results for everyone available, and we'll maybe just kind of create some kind of, I don't know, maybe even some elements of training we could do. No worries, Joey, maybe next time. Okay, so who's next? Okay, John P, maybe next class. Eric, we've done. Okay, Ball, we've done. Okay, Ron. All right, let's go to Ron. I think I missed Rick. Yeah. Hey, Ron, how you doing?
Good. Can you hear me?
Yes. Okay, perfect.
All right.
Okay, let's do it. So what's the immediate background?
Trading range to the uptrend where you're drawn.
Before the trading range, And it's kind of difficult here. How would you label, I mean, where is the trading range itself?
I'm saying all the way left.
Oh, I see. This one right here.
Yeah.
Let's negate this.
Okay.
Okay. I'm looking at this latest structure. Where is the trading range? Where do you see the structure? Let me just put some numbers here.
Maybe.
Okay.
So maybe like across 5 to 7 to 12 range, kind of the upper part of the trading range.
Like this?
Uh-huh.
Okay. But a lot of it is outside of the trading range. What do you say to that?
Yeah.
What do you say to that? What do you think, Ron?
It seems a little steep to be a kind of an uprising trading range. Overall.
Uprising. You said uprising. That's an interesting statement right there.
Well, you know, because sometimes you draw the trading ranges go straight across. Sometimes they have a downward bias. Sometimes they have an upward bias. But that seems pretty steep to be the whole thing. Like if you draw the low from 6 to 8 to 12. That seems pretty steep to be. I mean, I guess it is.
Yeah, maybe something like this. Maybe we.
Like
maybe we have an upslope in trading range.
Right.
Yeah, and we studied those, right, in WTC1 and WTC2 here. So if this is a trading range, then could we label this? Let's just say like phase A. Let's not label 10, 11, 12, 13, because we need the bias for that labeling. But 5, 6, 7, 8, we could probably label. How would we label it?
I'd say after 6 would be end of A in there between.
Say this again. After 6 or something?
Right, after that, right between that little gap up after 6, right in there, the end of A is what I would call it.
The end of phase A. I see. Okay, yes. Okay.
Yes.
And how would we label 5, 6, and 7 then, if this is phase A that you identify?
As buying climax, automatic reaction, and test.
Okay, buying climax, automatic reaction, secondary test. Okay, so then the area of 1, 2, 3, and 4 could be labeled as
preliminary.
Yeah, preliminary supply, right? Okay, so then therefore climactic run is where?
Not that impressive.
But where is climactic run?
At 5.
Or into 5, right? So it's a climactic run is going to be the last rally of the lows of the support of the preliminary supply and into the highs of the buying climax. So here it is. Here is our climactic run. now that we understand the structure here, 5 to 6 is an automatic reaction, but also is a change of behavior. Correct. Okay, so let's make an assessment of the change of behavior. Strong, weak. What did it do? What did it do?
Very weak. Pretty good relative to all the rest of the volume. The volume increases pretty greatly.
Okay, and then look at the spread as well, right? Before that, to the left, do we see that type of spread?
No,
to the downside?
No, it's like twice the spread.
Yeah. So the character of this, bullish or bearish?
Very bearish.
Okay, so character is increasing bearish. Okay, well, we have that. Okay, great. But now we look always at the character and the result. Okay, so what is the result of this change of behavior? Did it break the climactic run? Did it go into the lower low?
No.
No. Okay, so the result is still then bullish.
Okay,
yeah. So I would say like this is the area of the support. We didn't fully break it. So with that, we could consider this to be a higher low. Okay, so did our bias change from up to down on this change of behavior?
No.
No. Even though character is bearish, we can't change the bias just because the structure was not broken. Okay, let's, now that we see the structure here, okay, again, I'm gonna just draw it so that you guys would remember. Let's do this. 1, okay, 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, let's compare the swing to swings. First, let's, in the swing analysis, let's compare, let's say, let's start with the rallies. Rally to the rally. Okay, so compare 1 and 3. What is more aggressive?
I'd say 3. Looks like the spread's about the same, but the volume's a little higher on 3.
Yeah, it's kind of interesting. 3 is definitely more aggressive than 1, right? Maybe like this bar is maybe this one, but I mean, like, look how many bars this one has, in the volume. Yeah, so I'd say like 3 is aggressive. But I also want you to notice that with all of this aggressive character, what was achieved by each of the rally?
Right.
Negative.
Right.
Yeah.
Didn't overcome the structure to the left.
Yeah, so kind of interesting. So let's note that. A lot of effort, and yet it didn't break, it didn't extend, it had a negative extension here. Okay, 3 and 5.
Let's say 5. 5's more aggressive.
5 is more aggressive. Yeah, kind of hard to, to gauge here with that strength, but this is more stable, I would say, right? So like these are 2 reactions here. This is a smaller reaction, and it's just up, 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 up. Then this volume represents also supply, like supply is coming in. There is less supply here. So I would agree with Ron that 5 is probably better than 3. Okay, now let's compare 5 and 7.
I guess I have to say 7.
Yeah, I would probably go for 7 as well, right? So this bar is pretty significant. It breaks out, it extends really well. Yes, it does have some supply, but you haven't had this type of bar on rally number 5 or 3 or 1. You didn't have the bar that breaks out on increased volume, and it's a valid breakout right here, with presence of supply into the resistance, and then that's the attempt to stop right here. Okay. And then the next one, let's compare a 7 and 9.
7 and 9.
Mhm.
7's very aggressive.
Yeah. So 9 is weaker.
Right. Oh, I see what you're saying. I see what you're saying. I was already looking at the next downtrend. Yeah, 9 is definitely.
Yeah, we're comparing 7 to 9. And we're seeing that 7 was more aggressive and then 9 is weaker. Okay, interesting. So in terms of the rallies, what we have is first improvement, and that would be from, let's say, 1 to 7, and then deterioration, local, at 9. Okay, so that's how demand behaves. It behaves as a leader first, and then there is deterioration. By the way, shortening of the thrust here in some ways, and then at 9, a much weaker rally. Okay, now let's look at and compare reaction to the reaction. Okay, let's compare 2 to 4. What is more aggressive?
I'd say 2.
2. Okay, 4 or 6?
4 for sure.
4. 6 or 8?
8 for sure.
8. 8 or 4? 8 or 4?
8 has
8.
a little more spread, but it doesn't break the previous structure either.
But look at 4.
Yeah, the spread is larger.
Yeah, larger, more
And
larger
more
spreads, right? More often that they happen here, like 1, 2, 3, 4, 5, 6. Here, I'd say maybe like 1 and 2, right? So this is more aggressively down, 8. 8 or 2?
I'd still say 8.
Yeah, still say 8. So kind of an interesting picture here as well. So we're seeing a little bit of a local change here for both demand and supply. Do you see that? Right. So first we have deterioration from 2 to 6, and then aggression at 8. So, and here is the trick here. It's just whenever the change happens this way, we need to identify which force is stronger around the area of change. So this is our local change. What is stronger here? The rallies or the reactions?
The reaction.
The reaction, yeah.
Last.
Yeah, so we kind of seeing how there was an improvement in the demand. We still were going up, limited upside was shortening of the thrust. And then in terms of the supply, then we're seeing deterioration of the supply into reaction number 6, and then aggression at 8. And it's being confirmed by the price, it's being confirmed by the volume signature, and so on and so forth. So what do you think is happening here, especially into 7, 8, and 9?
I mean, overall, the chart bias still looks like it's up, but it looks like it's changing and getting, the change of behavior.
Yeah, definitely a change of behavior here. I mean, we don't see the structural changes yet. I think, again, it's just the strength that comes prior to that, right? It's defined by the uptrend itself, and it's defined by the upslope and structure of the trading range. We do not see any structural changes here. So therefore, we have to rely on the character. So what is the character going into the end of the chart?
Bullish.
Okay, but we had this change of behavior, remember?
The character, okay, yes.
Right,
yes.
the character. So let's go through this again.
Yeah.
Demand was improving up to point number 7. The supply was deteriorating to the reaction number 6. and then everything changes. Local deterioration, the next rally is not that great, and then local aggression of the supply into 8. So we have a sequence of aggression to the downside with the weaker rally as a change of behavior. What would that suggest? Aggression to the downside and weaker rally. Like even not thinking about the whole structure, just like thinking about this element right here.
That the next move is down.
Yeah, and if the next move is going to be down, here's where the structural change will come. So we just don't have it yet because it's not being shown to us on the chart. But if we're correct and this is a distribution, then this structural change will come later on. Okay, Ron, I'm gonna kind of let you decide what you want to do with this. Which bias would you want to apply it to? Let me just go through some of the comments. Volatility and volume are increasing on the right side from Iqbal. Okay, yes, interesting. So increase of volatility. Okay, and volume as well, slightly. Suggesting some kind of weakness. Okay. Is this a leadership? I would say so. I mean, like, look at how, it still tries to go up. It's just trying and trying and trying and trying, but this is aggressive, this is aggressive, this is aggressive to the downside. It's almost like demand is no longer in the same type of control as it was right here. Look at the reactions here. They're so muted. They're not that great as in this area right here. So with that, as we said, like only this shows us, I mean, like this also has some elements of selling, but this shows that the next short-term move is to the downside. If this were to happen, then we break down. Okay, Ron, how you would vote?
The other thing in that, in the reaction and the next up move, every single up day has a tail too.
Beautiful. Yeah.
I'd say the bias is.
Yeah, look at this. Starting from this, right? Selling, selling, selling. They are buying in. There is a gap here, buying in, but into the close, selling. Next day, trying to buy in into the intraday, low or high here, and still selling into the close. Next day, trying to buy again and still selling. Then finally, demand is coming in, and what happens? Selling, 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 and I'm looking at the tails, right? So tail, 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 tail. Okay, good observation. So what's the bias?
Down.
Down.
Yeah. Distribution.
Yeah, I'd say that this type of patterns right now is like whenever I see this, and by this I mean upsloping with increased volatility, and especially with this type of change of behavior, and then this happens in potential phase D, it definitely catches my eye. I start thinking like, why is it different than what has happened before? Why is it not behaving the same? And even though it seems like higher highs, there is definitely some selling that takes control over some time, over some periods, and you coincide it with the effort, and it seems like the character definitely is changing on the right. The confirmation of this would be overcoming this bar. Like, okay, could we do something like this? If we break local structure here with decisive character, then we most definitely can go lower. And a lot of people could be caught up being bullish here. And if they're going to start giving up their positions, where their stop losses are going to be somewhere here, right? Somewhere here, somewhere here. So you might have like drop, up, drop, up, drop, something like this, pretty quick with some gaps, stuff like that. Okay, let me double check. Yes, distribution. Okay, so Ron, I would say like my personal feedback for you is I caught that moment when you were the logic that you were going through, that I was leading you through said bearish, and you said bearish, and then I ask you what's your final take, and then you turned into bullish. What happened in that moment?
Well, where it is now is still not below the
Mm-hmm.
upper support around, you know, it's still above the support in that kind of left shoulder area, if you would say that.
Mm-hmm. So whenever we have no structural change, that's when we're having kind of like a difficulty, guys, right? So it's not just with Ron, it's with everyone, including myself, and we need to go into the character and decipher it just based on the character, not on the structure. So, and that's what happened, Ron, right? So I want you to catch those moments, right? How am I going from bearish to bullish? What turned me? Oh, I see that I don't see a structural change, so therefore it brings that counter argument into my mind, even though you know, my initial analysis was observing more of the change, you know, in this area right here as more like a change to the bearish picture, and then I persuade myself to bring on a different solution. So how would you go about this? How would you change that?
Just swing by swing analysis instead of the overall structure.
Yeah, instead of just looking, and I drew eyes here, right? So we kind of like decide with our eyes as to like, oh, I see the structure, it's high, high, it's high, low, so therefore still up. Structurally, yes. Character is changing. So I'd say, Ron, I want to work with you more on that change of character, right? So where we're seeing from bullish to bearish, and it just has happened, and it just suggests that the structure is going to be broken. I want you to be open to the possibilities that some of the charts are going to look like that for you. And you have to account for the character as well.
I agree.
Okay, so yeah. So we just identify something that Ron needs to work. A lot of us need to work on. And again, I'm not excluding myself whatsoever. So each day I do my work, I do my simulations, I do my practice, I do my trading, and every day I do the post analysis, and that's how it goes. That's your job. So do your job. Ron, thank you so much.
Thank you.
All right, guys, that's it. You know, this is what we're gonna do. I mean, obviously, I'm gonna put more of the material around the edges of the bias game, and we'll definitely have the material on the significant bar, on the swing analysis, on the sequential bias analysis. That's all gonna start with the next class. For those of you who are WTC1 students coming in into WTC2, please read these two articles as your homework. I want to bring your mental state into the state of practice, that you're going to spend time practicing. And actually, I think I'm going to redo the whole class. I think I'm going to just put you guys into the environment where you will have to decipher a lot of charts. A lot of charts. Let's just go crazy this semester. So send me as much as possible of your bias games, but again, you have to do them correctly. You have to send me the charts up to the know-it-all bar, and not necessarily just the first one, right? So if you send in to me the chart that was the last chart in the last, you know, semester, something like this, right? So where we kind of like here, right? And there are no indication, you know, of the actually that was completely incorrect. Like to the left, there were. I looked at this later. That was the chart. So this was not shown to us. So you need to show the prior action, and you need to show it to the first know-it-all bar, or to the second know-it-all bar, which is this one, or to the third know-it-all bar, which is this one, or to the fourth know-it-all bar. So you have to show it either here, 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 or here somewhere. right? So you can't show the chart here and ask us to decipher this, right? Because it would never make sense. Here, I would be always thinking to the next swing is to the upside. Okay, we'll talk more about this. There is definitely an art, to sending those charts and doing this correctly. Any questions before we close out? The bias game that we didn't are the bias games that we didn't cover in the slides? Joe, I'm not understanding the question. Are you asking, are there more bias games? Yes, for sure. There will be more bias games. Yes. Okay, training is happening. Challenge accepted from Rick. Excellent. Okay. It would be good to see the follow-up chart development after the know-it-all bar from Neil. Yeah, I agree. Just right now, I'm working by myself, right? So starting with next class, somebody will be helping me, and you guys will be telling us, like, this is this stock, this period, and then we'll go and we'll look at that for sure. Yeah. Are there certain bias games we're supposed to do from Ron? Oh, okay. Yeah. So please do 242 to 244. 3 bias games. And why don't we start with those in the next class? Let's go through those. Okay, any more questions? Any other questions, comments? If not, then we are done for the class, 5:40. So yeah, we're done. And thank you guys so much for being here. Again, really looking forward to working with all of the alumni on the bias games. Looking forward, yeah, to a great semester together. Again, this is going to be intense practice, 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 practice. I'm going to increase the intensity of the homework. So I'm going to increase the intensity of the in-class participation and in-class, solutions. Let's go through 100 bias games. Why are we just like, well, we would go through the bias games in 15 games, 100 bias games in 15 sessions. So let's go through 200 bias games or something like that. Let's put some pressure on ourselves. With that, thank you guys so much, and I'll see you next Tuesday. Bye-bye.